Citigroup beats earnings on the top and bottom line, reporting earnings of 84 cents a share compared to Reuters' 81 cents a share. Revenue came in line at around $20.83 billion versus $19.25 billion that we were expecting. The company also released reserves of $1.42 billion. Scott, I'm going to throw it over to you. Citi up 23% in October, headed into the print. How would you be trading the stock?
Well, there's a lot going on in that report, and I'm probably not smart enough to say whether it's positive or negative, so I'll watch the stock. Right now it's up about 20 cents. It seems like it's in line, so they're going to really do everything they can to examine this balance sheet, so I'll examine the chart for you. So if you take a quick look at Citigroup, you'll see this. All right, this was that move off the low. This is when the whole market bounced. Came back up, held in front of this little downtrend, right, and then it broke above it. Nice two-day move, and it's been trying to consolidate. So if this earnings is in line and this is perceived as good, I would say that there's no way that it gets back below this recent low area of 27.23 and then 26. So as long as Citigroup stays above 26, I would say it looks constructive. And then if we do see some momentum, which we never really see in these banks, and it starts to break above this recent flag and starts to get above, just say it was as high as, 29 or so, maybe it gets up to this bigger resistance. But I don't think it happens today. I would just like to see in an overbought market like we have now, let them hold up a good earnings report in the banks, because usually they think anything that's up they like to sell.
Fair enough. Let's go to Wells Fargo, reporting earnings of 72 cents a share, in line with Reuters estimates. Revenue was a bit light, coming in at $19.63 billion versus estimates of $20.28 billion. How's this stock looking? It was headed up 15% in October.
This stock has been acting better than some of the banks recently, so this little miss is probably going to be something that has to be taken in stride. So it'll be interesting to see if it can absorb, because I think it's down 70, 80 cents right now. So I'll show you the chart where it came from and see important support. So if you take a quick look here on Wells Fargo, you will see it had a nice move off the lows. This is one of the few that actually rallied up into recent resistance, okay? So right now what I think you have to do is look at these levels right here. Look at 25.30. That could be an area to buy some back. If you sold some into the excitement above 27 after a move from 23, congratulations. So if you're back in tier one, maybe you go back and buy some right here. Or if you sold and you have nothing and you have to be long a bank, you have 25, and then anything below 24.60 would be very disappointing, and then it would ruin some of the constructive nature of this stock.
So the takeaway for the banks here is they just have to hold up. They just can't break down. Is the XLF in a position where it can really absorb any kind of loss?
For the last year, we've never been able to buy strength in the banks. You could buy them in the hole, you could buy them when they're stretched down, and if you pay up for them, you're not rewarded. So at this point, they're still trying to hold higher. They're trying to change that composure. But obviously, it only changes when it does. So at this point, if you look at the XLF, it's trying to hold higher. This is the group. This was the move off the low. It actually broke this mini downtrend going into JP Morgan, like everything else pulled in. So as long as it stays above 12.20-ish, I think it's constructive. And if it can stay up here for a little while and show some commitment, maybe there will be one day where it actually breaks higher, and then you could see 13.50 to 14 at some point, and that will really be helpful for the market. So right now, as long as it's not a crazy headwind and causing psychological problems for the markets, just keep them in line.
Keep them in line. That's the takeaway right now from Wells Fargo and Citigroup and the XLF. Stay tuned with The Street for more earnings coverage.